Welcome everyone to Vested Interest. This is Shane, and before we get in the video, I'd like to take a moment to thank everyone who's taken the time to watch, comment, and like the videos, and a special thank you to those who subscribe to the channel. I really do appreciate it. The channel continues to grow because of people like you, and if you are a dividend growth investor and new to the channel and have not hit that subscribe button down below, go ahead and take a second, hit that subscribe button. Don't forget to hit the notification bell so you're notified whenever we drop any new videos, and hit the thumbs up. Let me know what you added to your portfolio this week. We did add $2,000 in total to the portfolio this week, and I do portfolio update videos like this every Sunday morning at 7:30, where you'll see exactly what I added to my portfolio, any buys, any sells, any dividends paid out, any options that I was in for the week. I cover all that out in the open, fully transparent, no paywall or other site to go visit, no paid Patreon, no Discord channel, none of that other stuff. It doesn't cost you a thing to see what's going on here. I am just a regular guy, grew up in a double wide trailer to two parents who didn't even graduate high school, so I don't have a background in this. I just want to set up this channel so that people could see a regular person can invest and work their way to financial freedom. And in my opinion, dividend growth stocks are the way to do it. I also do a stock pick of the day series Monday through Thursday whenever the market is open, where I cover a stock that's pulled back on the day to see if there's any value there. I also do monthly videos where I cover the previous month's dividends that were paid out, as well as what I'm looking to buy in the next month. Again, in this video, this is going to be a portfolio update. We're going to look at what we did with this $2,000 in new capital added to the portfolio. Let's jump right in. And no options. We typically cover options first. No options. With the market being as volatile as it is, the past couple weeks, I really have not seen any of the options that I've tried to throw out there hit. Stocks were either running down, dropping off a cliff, or they were running back up. So whenever it's that volatile, a lot of times the strike prices that I set, people aren't interested, or they are interested in better strike prices, and just nothing's hit in the last couple weeks. So no options to cover. It is what it is. Sometimes we get a lot, sometimes we don't get any. Now on to the first dividends of the week. On November 14th, we were paid out $98.07 from Enterprise Product Partners, ticker EPD. This is out of the energy sector. This is a gas and oil company distributor here. They paid us, like I said, $98.07, and we have the drip set, so that means anytime a company in the portfolio pays out dividends, it goes right back in and buys more shares. That's what you see here. That $98.07 went back in and bought 3.73928 shares of Enterprise Product Partners. I have not really been adding to this. I may throw a few more shares in here to just get it over 200. So close to being over 200 shares. I might throw a little bit into it next week just to get over that. Right now it is a little over my cost basis, but I really like the company. Very nice dividend yield on this one. And these 3.73928 shares added an additional $7.47 in additional passive income over the next calendar year. And even more dividends came out on the 15th. This was actually a very, very good week in dividends, over $400 in dividends. As you can see here, all these dividends paid out averaged out to $319 for this tranche on the 15th, and on the 14th at $98. So that puts us well over $400 in dividends this week. And it broke down like this. Ally Financial, ticker ALLY. This is a bank out of the financial sector. This is my bank. I use this for not only my dividend growth portfolio, my two custodial accounts for my daughters, my savings, and my checking account. And they have a very nice yield on their savings. Not much on their checking account, but they also have some CDs that you could get into that have pretty nice yields, over 4.5%, 5%, depending on how long you want to put your money in there. My savings gets 4.25%, which is very nice. It's almost like a CD in and of itself, so I like the high rate. Now, they are just a bank, a company online. I mean, they are a bank, but primarily online. You cannot go to one of their locations. You have to do everything online, but they do reimburse your money back to you if you draw money out in an ATM, as long as you use one of the ATMs in their system. So enough about Ally Financial there. Little plug for them. I really should be getting paid for these plugs, but they are a bank I use, so I figured I'd let you know that. Again, they paid out $69.31, and again, the drip is set, so dividend reinvestment plan. That means anytime a company pays out dividends, it goes right back in and buys more shares. So this $69.31 picked up 2.54268 more shares of Ally. Procter & Gamble, I have been adding to this one over the last couple weeks. I'm going to continue to do so long as it remains under $155 per share. Procter & Gamble, ticker PG, out of the consumer staple sector, paid us $21.23, and that's part of the reason I want to add to this one. I want to get this up a little bit. That picked up 0.13999 shares of Procter & Gamble. Realty Income, the monthly paying REIT out of the real estate sector, ticker O, paid us $46.60, and we are oh so close to picking up one share every time they pay out, but not quite yet there. So it was 0.88784 shares of Realty Income for this $46.60. And Omega Healthcare Investors, another REIT out of the real estate sector. This one focuses primarily on elderly care. They paid us $181.86. Very nice payment, very nice to see. And that picked up 5.77013 more shares of Omega Healthcare Investors. And all total, this 319 in dividends and these additional shares that those funds bought added an additional $21.75 in passive income over the next calendar year. Now, finally, on to the new capital we invested. We did invest on the 15th. While we were receiving dividends, we also went in and bought more shares. We added $1,232.39 to the portfolio on November 15th. And with those funds, we picked up 6 more shares of Pfizer, ticker PFE. We picked up those shares at $29.94. This one is one I've been nibbling on for a while now. 2 shares here, 4 shares there, 6 shares like this. I will continue to do so, bringing down my cost basis. Really like the dividend yield on this one. This is out of the healthcare sector, and the healthcare sector overall has really been hit. Johnson & Johnson is another one you'll see down here that I've been adding to, even though this is getting to be a pretty big portion of the portfolio. So at some point, I'm going to have to back off. But right now, I'm still dabbling. But anyways, we picked up those shares, $29.94. We picked up 2 more shares of Nutrien, ticker NTR. This is out of the materials sector. This is also a Canadian company, so there are some tax implications. My particular brokerage, Ally, like I talked about a minute ago, they take the taxes out right away. If your brokerage doesn't, you need to make sure you're talking to your tax advisor and make sure that you account for the taxes, putting some money aside. I like how my brokerage takes it out right away. I don't have to put any money on the side or pay for the taxes later. We picked up those 2 shares at $57.74. Another one I've been nibbling on, 2 shares here, 4 shares there. I'm going to continue to do so. I want to build this one out maybe to 140, 150, 150 shares there, and then I'll probably back off. CVS Healthcare Corporation, ticker CVS. This is also out of the healthcare sector. Picked up 2 more shares there at $69.07. Enbridge Inc., ticker EMB. This is another one out of the energy sector and also another Canadian company. We picked up 6 more shares there at $33.55. So everything I said above about Nutrien and the taxes goes for Enbridge as well. And this is a lot like Enterprise Product Partners. They pretty much provide the same sector, or in the same sector, the energy sector, provide oil and gas. They do have their hands in a little bit more renewables than Enterprise Product Partners does. So this is a little different, but both of them in the energy sector. And there's Procter & Gamble again, 2 more shares of ticker PG. So not only did they pay us dividends, but we went in and bought a couple more shares, and we got them a little bit lower than what they closed the week at, $150.56 per share. I think they closed the week at about $151, if I'm not mistaken. I'd like them back in the 140 range. Maybe we can get them there next week. And there it is, 2 more shares of Johnson & Johnson, ticker J&J. And they are out of the healthcare sector as well. Picked up those shares at $148.37, and just too cheap for me to pass up on Johnson & Johnson. Like I said, I probably won't run this much over 110, maybe 120 shares, and then I really need to back off of this one. This is becoming a very large position in the portfolio, almost to 10% of the portfolio. We'll see that here when we look at the sector weights. $1,232.39, and these new shares added $47.52 in additional passive income over the next calendar year. And we weren't done. We went in on the 17th here, Friday, added an additional $767.79 for $2,000.18 total added to the portfolio. And with these funds, we added 13 more shares of Medical Properties Trust, ticker MPW. This is another REIT. They focus on the healthcare sector and sector as well, elderly care, as well as hospitals. And this one has really been beaten down. We picked up those shares at $4.61. Very, very high yield on this one, over 12%. if I'm not mistaken, and they did recently cut their dividend. They are having some issues, but I think they are overblown, and the price more than reflects the issues that they are having. So it is worth the risk, in my opinion, especially at such a high dividend yield that even if they were to cut it in half again, would probably be over 6%. So I'm going to continue to add to this one here. Like I said, I believe the issues are more than baked into this price, under $5. And not last, but certainly not least, we added 10 more shares to Sysco Corp, ticker SYY. This is out of the consumer staples sector as well. I'd like to get this to 100, at least 100 shares, and then we'll probably back off that. This one has really run up. I was buying this into the low mid 60s. It has gone over 70. I would love it to pull back down, but so long as it stays under 73 per share, I'm going to build this one out to, like I said, at least 100 shares and then probably back up or back off. And the $767.79 in new capital here and the new shares that it picked up added another $27.80. So with all the dividends paid out on the 14th, the 15th, the new positions we bought into on the 15th and the 17th, added an additional $104.54 in additional passive income over the next calendar year. Very nice to see, over $100 added per week. And it's funny to kind of go back in time. Maybe you should do a collage video of all the, maybe by quarter or something like that. Whenever I first started, you might get, $8, $10 in additional passive income added a week with all the new buys. Then maybe it was the 20 a quarter later, then 30, then 40, then 60, 80. Now we're seeing weeks where we're adding over $100, and the dividends paid out are $400 a week. I mean, that is really, really the snowball growth in effect. You can see that dividend snowball growth week over week if you pay attention to the channel, and hopefully that encourages some of you. I know some of you might have smaller accounts and are not putting in $2,000 a week, but they will grow the same as this account over time and as you add and as dividends are paid out. So it is going to happen. Fret not. It just may take a little bit more time. That's all. Time is your friend in dividend growth investing. Let it do its thing. All right, let's look at the sector weights here. Communications makes up 9.43% of the portfolio. Consumer discretion sitting at 1.45. Consumer staples makes up 8.18%. Energy sitting at 6.55. Financial sitting at 10.13. Healthcare, largest piece of the pie, sitting at 17.27%. Industrials makes up 7.89. Technology sitting at 7.73. Materials still in second place at 13.63. Utilities at 5.15. REITs and real estate in third place at 12.60. No ETFs. I consider this my own ETF, though in my daughter's custodial accounts, I do have SCHD and VWO, and I am waiting for VUG to drop into the buy range. You can see over here on the right, portfolio sector weights as well. Here's the percentages that match up to the pie here, the pie chart that you're seeing, and then here are the dollar amounts in each sector. Now we're on to what a lot of you come to see every week. Again, fully transparent, out in the open. I show my portfolio, all the positions in the portfolio, how many shares I own, the current price as of the close of business, the market value, where they sit at the close of business on Friday, average share cost, that's my average share cost. Here's my purchase price, so that's how much I have into it. Whether I'm up or down here, obviously if you're in the red, that means I'm down. Percent up or down here. If it's in the red, definitely down. If it's in the green, depending on how dark green it is, right? 42% here, a little darker green, 48% here, darker green. That means I'm in the green a little higher. Sector weight, or sectors, which sector they fall in, whether it's a quarterly, monthly, semi-annual payer, current dividend yield as of the close of business on Friday, my yield on cost. And on the previous page, we saw the sector weightings. Here is the each individual's weighting in the portfolio. And as we said, let's look at Johnson & Johnson. Johnson & Johnson right here, 104.682 shares. Like I said, maybe run it up to 110 to 120, but it is 8.62% of the portfolio. I don't want any one position to be over 10%. So at some point, I don't mind building this up. I'd like to get the yield on cost over 3%. So I will dabble and continue to dabble here in Johnson & Johnson, especially if it drops. Well, it was 149.36 it dropped. So it dropped a little bit lower than we bought it at the 150s. So I'd like to get it back in this 147, 148, 149 range, run it to 10 shares, and then keep it under 10%. At some point, like I said, I'm going to back off on this one. But that gives you an idea of what I'm looking at here. Portfolio weighting, estimated annual income in this column, the payout months, their annual dividend growth, and where they sit at 15% of the 52-week low. So I have currently 5,541.339 total shares, market value of $181,321.80. I have $190,198.12 into the portfolio. That means I am down $8,876.33. Now, I'm not freaking out about this. Let's talk about this. I know it looks like a bad thing. Oh, I'm in the red. I lost a bunch of money. No. Until you sell positions, you have not made or lost any money, right? Like right here, let's look at Owens Corning. Oh, I'm up 42.63%. Well, not really. The stock is up 42.63% from where I bought it. But unless I sell these 44.578 and lock in this gain, I haven't made any money, right? Just like I haven't lost 20.56% on Pfizer. Unless I sell these 220 shares and lock in this loss, I haven't lost anything. I am down overall 4.67%. And if you've been watching the channel over the last few weeks, you can see how crazy the market can be. Was it a month and a half ago? I was up 4%, then I was down 9%, then I was down 6%. Now I'm only down 4%. Next week I could be back in the green. So this doesn't mean anything to me. This loss or gain right here, I'm not planning on selling out of any of these positions. So long as they remain good businesses, I'm going to hold them. And whenever it goes in the red, I actually buy more. It brings down my cost basis, it brings up my yield, and it brings up my dividend returns, right? So that I'm a long-term dividend growth investor. I want, well, let's keep going. Current yield 4.809%. Yield on cost is sitting at 4.585%. I want this to grow. This is what I'm focused on. The estimated annual income provided by the dividends, right? The dividend paid out. When they pay out here these dividends and they buy more shares of the company and they make this grow more and I add new capital and it gets bigger and bigger, this is what I'm looking at. The dividend snowball, the dividends paid out, the annual dividends, cash flow provided by the portfolio, all the positions in the portfolio, up to $8,720.35. And this continues to grow week over week, month over month, quarter over quarter, whether the market's up, whether the market's down, whether the market's floating sideways, and whether I'm in the red like I am now or I'm in the green. It does not matter. This right here is not what I'm focused on. This is what I'm focused on. This is what eventually is going to give me financial freedom. I'll be able to live on the dividends. I won't ever have to sell any shares. And I can just ride off into the sunset and get away from the 9-to-5 daily grind that the rest of the world is trapped on the spinning wheel. We'll call it the hamster wheel of the working life. Well, that is it for this one. A little bummed here. This is the backyard. I know it's nice to be on the lake, but whenever it gets cold, it starts to bum me out a little bit. The pool is closed down. We're not swimming out there. We're not riding jet skis anymore. It is headed to wintertime. I do hope we get enough ice on the lake this year to ice fish. I am an ice fisher. I like to do a lot of stuff outside, fish and hunt. Drop a comment down below in the comment section. Do you do any fishing or hunting? What do you prefer? What are you fishing or what are you hunting for beyond dividend growth stocks, that is? And as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Hit that subscribe button down below. Help me grow this channel. Help me get the word out. Help me reach other dividend growth investors. Words of encouragement out there are much better than criticism. So let's get the word out. Dividend growth investing. We can all head off into the sunset with our portfolios and hopefully become financially free as well. That is the whole reason behind this channel. And as I said, I do personally read and respond to the channel or to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have some stocks you'd like to cover in the Stock Pick of the Day series, go ahead and drop them down below and I'll work them into the rotation. And let me know what you added to your portfolio this week. What are you buying? Did you sell anything? Are you in any options play? Would love to hear from you. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by, and we will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risks. You can't lose money and should never invest any amount of comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select your criteria, or seek the advice counsel of a certified financial advisor.